Right. So the peak rates in central banks, Chilo, is not necessarily the same as peak yields. I mean, sensitivity, of course, I mean, they're largely correlated, but, when you get to the long end, that correlation starts to break down. When do you think we will see peak yields when it comes to government bonds? Because that's to your point, that's what's roiling these markets right now.
Well, our house views on policy's impact on the developed market economy, especially the U.S., is that it's going to slow down, later this year, early next year. The U.S. may escape a technical recession, but then nevertheless, we're going to see slowdown. Now, when we see slowdown in the economy, slowdown in the labor market, and so on, that would be the key signals for yields peaking. And that could come a little later than the rates peak.
Okay. I got to ask you about the BOJ, just given all the intervention, speculation, and the like here that we've seen so far. I mean, it seems like they're caught to two things, right? Whether it's yields, in the 10-year heading to 1%, or dollar-yen punching about 150. You can't really win at both. I'm just wondering, how are you approaching Japan at the moment, and what's been going on, the volatility there?
I think we need to understand how the BOJ runs its monetary policy, what factors it's focusing on more. And from my understanding, Governor Ueda now is looking for signs of demand pull inflation. Are they strong? Are they weak? Are they strong enough to keep inflation high so that the BOJ policy has to shift? Or are they not really a concern at this point? And most of the inflation that we see in Japan is mostly cost push, which I think the BOJ obviously sees through that. And that's why Governor Ueda is still quite defiant of market expectations that he will end the yield curve control this year. In any event, with market volatility like this high that we are facing, I think any central bank will be cautious about changing a key policy like yield curve control, zero interest rate policy, and so on. So we'll see the BOJ policy shift, but until the economic fundamentals in the U.S., in Japan, calms down, steady, and shows that the broad picture growth is back, inflation probably is back, then the BOJ will consider about shifting a major policy like yield curve control.
Right, and markets are always guessing on many things, right? We're guessing maybe how quickly the U.S. economy might be getting to a recession, how quickly Japan is coming out of inflation. Also guessing to what extent we're seeing a bottom on the Chinese markets, Chilo. And what do you make of the data we've seen over the last 6 weeks or so? And can we now call a bottom on the economy?
We've seen more Chinese easing. I've been arguing for months that Beijing has to become more forceful in easing policy in order to keep the growth momentum from faltering further. And it seems that they are now moving towards that direction. And we've seen some green shoots in the Chinese economy over the past 2-3 weeks. Even the property market transaction volumes, for example, seems to be stabilizing. But at this point, I think it's still too early to call for a bottom yet. If we see Beijing continue its more forceful or broader policy easing in the next month, 2 months, then it would be likely that the Chinese economy will stabilize by Q4 into early next year. At this point, it's still quite sensitive, and really we need to look at the data now as they come out and see how the PBOC move.